Hi, this is Peter Roisman from Rev. If you want to learn how to use your small axe to build an empire, you should be listening to the Small Axe podcast with my good friend Nico.
Hey guys, it's your boy Nico here from the Small Axe Podcast. I want to show you how to use your small axe to build a lasting empire. You see, not everybody begins their investing career with millions of dollars, a huge network of investors, or the knowledge necessary to become successful in this space, and that's okay. What I focus on here on this podcast is helping you hone your skills, sharpen your tools to become the best investor that you can be. Now, I want you to sit back, relax, and enjoy this show. If you have any questions or you want to reach out to me or the guest, feel free to do so. Love you guys. All right, Small Axe community, it is me, Nico, and today I'm hanging out with somebody that is so cool, and I just met him, so for me to say that he is so cool, it's a big deal. Now, what we're talking about today is leasing, and this is a very pertinent topic today because many of us operators are struggling with leasing for a variety of reasons, and I'm not going to get into the nuances. I'm going to bring this guy, Peter, on to discuss them. So Peter Roisman is here to join us today. Welcome to the show, Peter.
Nico, thank you. Glad to be here and glad to be talking about leasing.
Yeah, me too. It is a huge topic. And before we get into it, maybe you can take a minute or so to go over your background and how you got to where you are today.
Sure. So I've been an entrepreneur since probably I was 8 years old, 10 years old. So anyway, I always run businesses. I started my own sports management business at age 23 and represented athletes through about my late 30s, and then got out of that business. And I ran a division of Octagon, just to throw that out there. It's one of the largest management companies in the world. I started on my own, joined them, been back on my own. Anyway, ended up in real estate, developing surgery centers, developed 21 surgery centers over 7 years, was with the largest company. We grew it from 30 centers when I first joined there to over 200 surgery centers. And that was kind of real estate. It was in my blood. My dad was a real estate developer as well as a lawyer. I was a lawyer and a real estate guy. And so I've been a sports and real estate guy for most of my life, and that led naturally to creating a leasing company called Rev, and that's where we are today.
That is a really extensive and wild background, Peter. I'm really excited to have you on and talk today. You have a lot of experience and knowledge. So let's get into it. What is Rev?
Rev is today a technology and training company for leasing in multifamily only. So commercial real estate, encompasses many different types of properties, from industrial to office to retail and medical and others. And so multifamily is one of the elements of commercial real estate, and it's interesting. It's the only element of commercial real estate that doesn't have professional leasing attached to it. And so I saw my partners, and I have two partners and a third and a fourth person that's a co-founder. And we realized that there was real weakness in leasing in this. And so we started a company to fix that problem, basically. I mean, in a nutshell, what happens in the multifamily world, as opposed to in commercial and other types of office and other types of commercial real estate, the person that's getting tasked with the job of leasing up a property is typically the least experienced, oftentimes untrained, and person in the management office. And if that person shows skills, that person then will be moved out of leasing. Will get a promotion to management, to property management, become an assistant manager. So it's planned obsolescence. If you show skills, you're out of leasing. And so if you don't show skills, you're probably marginal at leasing. So either way, the property loses. You don't get the best skilled person to doing the job that is required, which is basically to generate all the revenues for that property. Other than parking fees and pet fees and very minimal fees, 97, 98, 99% of revenues come generated by this leasing position.
Yeah, excellent. So are you a software based, or do you have like call centers? How does it work? And do you operate remotely, I'm assuming?
It's a great question. So what we are today isn't what we started as. Okay. So we started as an actual leasing team of people. So we would hire people outside the industry, bring them into the industry, and keep them as leasing people. and making a career out of leasing. So we were kind of the SWAT team that came in and fixed all the problems out there in the industry for owners and managers. And we were doing such amazing work as a team that we realized we couldn't grow to become a national company where we could help. Remember, 1 out of every 3 people lives in apartments in this country, right? There are 100 million people living in apartments. So we could never get to the scale just by hiring people, training them up, and keeping them as great leasing people. We realized that we had to build tools for people to help themselves, right? We built assessment tools. We have basically objective. We generate objective, novel data that basically assesses the leasing performance of any property in the country. And so, that technology allows us to rate the leasing performance that's going on. Basically, that we rate it in 3 ways. We rate the product itself, we rate the process being followed, and we rate the person doing the job. And so we go on property, we rate them in person, we rate them online, and we rate them by phone, and have all these data points, as many as 1,000 data points, and they're all objective. It's not a beauty pageant. It's literally objective. Was this task done? Was it done in a timely manner? Did they move the ball along? All of these kinds of things. And so we rate them, and then when we find some deficiencies, we have an e-learning platform where they can actually, address those deficiencies and train their skills up. So we've actually kind of got a closed-end system for helping anyone in the country, improve their leasing performance, hence improve their revenue performance, hence improve the value of the property, all of those things.
Excellent. Thank you, Peter. So how does it work? Like, who hires you? Or do you partner with people? Is it the property manager that you work with, or the owner? How does it work?
Great question. So we have several constituencies. Anywhere from the most obvious one is the owner. The owner benefits the most by an increase in revenues, right? And so the owners, obviously, large owners being the best. We tend to, I know your show is great, and it looks at some smaller scale owners that are building and trying to lift themselves to having giant portfolios. But it works with the small scale owner, it works with large scale owners. I mean, we've worked with pretty much every large company you've heard of, from Graystar to Lincoln to Highmark, Dayrise, I mean, on and on and on. I mean, we've had pretty much worked with Equity, we work with Weller, we work with Cardinal. I mean, on and on and on. These are all 25 to we've actually done some live core stuff. 700,000 units they have. I mean, they have 700,000 units spread among roughly 2,800 properties. So we get hired by owners typically, but it could be by asset managers. It could be by operators. And interestingly, I think there's a market for us to sell our new product to lenders, because we can reduce risk. So, and this is a great risk assessment tool for a lender. And I also think this might be kind of a tool for an investment advisory firm to use for their clients, because limited partners in real estate investments really don't have a clean look at how stuff gets generated. How is it being performed? I mean, they might see results, right? You'll see, how did we do in this investment? Great. But they don't know whether they left 30% of opportunity on the table or not. And there's no transparency. And this gives transparency to a lot of different potential, constituents of ours.
Wow. Can we dive into a little bit more of how the transparency works? Like, are you showing a lot of data? I know you mentioned a lot of different data points. Like, what is presented to the owners?
Yeah. So basically, we go in, we evaluate over the course of a 2-week period, and we are collecting all this data. Well, as I said, on site, by phone, and over the internet. And we're rating it. We're just recording, did they do this? Did they do this? It's literally objective. It's not our opinion of whether they did something. It's actually, did they do this, this, and this? And so we've taken the bias out of it as much as humanly possible. And we create a report, and we have something called the leasing score. We call it the Rev Leasing Score, RLS. And the score, it goes from, basically 0 to 700, and 700 being a perfect score. And we've done hundreds and hundreds of these scores. And the best score we've seen is 462, which in our rating is a good score, but not even a very good score. which would be over 500, and an excellent score would be over 600. And so, it's very interesting that even the best performers in the marketplace in the 400s are still leaving opportunities on the table. They're not closing out all the opportunities. They're not maximizing their per square foot. They're not maximizing their occupancy. They may be concessing when they shouldn't be, types of things that shouldn't be happening.
Peter, this is a seriously incredible conversation right now. I am really excited. Okay, so as owner operators, we are looking at vacancy. I'm assuming with your scores, you can kind of forecast, like after you do an assessment, you could say, hey, wait, you're at operating at 7% vacancy. We think we can get you to X. I'm sure you could do something like that. And then you could probably, you mentioned in their concessions, which you could possibly eradicate, right? And you're probably going to offer solutions before somebody would hire you. Is that how the process works?
It is, except, it's interesting. We don't, it's not us that at this point, because since we've shifted from our own boots on the ground model where we did determine the results, right? Our people got the results. We backed our people off of the ground, and we're actually giving now the tools and information to the operators on the ground and saying, listen, we'll work with you, but there has to be your effort that's going to make this happen. And so, we can want it all in 100%, but if the effort isn't 100% on the other side, it's likely not to happen, quite frankly. And so,
yeah, so it's like a partnership where you're setting the guidelines, the rules, you're setting the roadmap, and you're overseeing, and people just need to be executing it because you don't have the boots.
Exactly. Yeah. And there's a couple of things that owners and operators can do to influence the result, and we would definitely be a part of helping them build that program. And one of the things would be a bonus incentive program, right? What we recommend, our Rev Leasing University is the training side, and we have, at this point close to 100 courses, and there are 100 different modules, and they're all e-learning. And if you do this for a half an hour a day, so we're not telling you to drop leasing, right? We're telling you to take a half an hour of the leasing person's time a day, do these courses within, probably the period of 10 to 12 weeks. That's kind of a cycle. And then we would come in and retest, but they should start seeing improvement all the way along the way. I mean, you'll see financial results before we even come in and retest, because, they're getting more leases, or they're doing a better job at follow-up, or whatever it is. All of the things where they were weak, maybe they're doing better. So you'll see your financial results before you'll see the test score jump up.
Cool. Are you using typical or traditional marketing platforms? Like, I know we're using, rent, apartments.com, Facebook, Craigslist, those kind of things. We're listing all over the place. Do you guys do the same?
It's interesting. I'm all for the marketing of properties. I actually think training up your leasing team should be able to save owners and operators money on marketing. I mean, there's nothing wrong with the virtual touring that you can do on apartments.com and those kinds of things. Look, we think virtual touring and technology tools are critical to the performance of a leasing person. We don't believe they're replacements, right? So when I get on a bunch of panels and I start hearing people saying, yeah, we're going to lease up without any leasing people, and I almost implode. I have this visceral reaction to that, thinking, no, guys, this is really all about the people. You give them better tools and train them up and let them be great. And I mean, there are the rare circumstance where you've got the perfect property in the perfect location with a limited resource that may lease up without leasing people. It's possible. I certainly know of some examples of that happening, but I think, kind of like the Zoom call, like the thing we're on today, we're not going to do all our meetings by Zoom calls for the rest of our lives. It's just not going to happen. We will do a percentage of them, right? There's, during COVID, when it was critical, we couldn't be together, it made a whole lot of sense, and everybody was 100% virtual. But now I don't know, what people are probably averaging 2-3 days a week in the office. So, I mean, it's a hybrid. And just like that, those kinds of tools like apartments.com that you mentioned, those are great tools. And I just think, I've noticed a couple of trends in the industry. One of the trends that's hot right now is the consolidation of costs, right? And it involves technology and it involves shrinking staffing and some other types of consolidation, call centers and things, regional call centers, regional sales offices, leasing offices, those kinds of things. And to some degree, the industry is correct in looking at cost savings, but to the degree that they're looking at cost savings at the expense of looking at revenue generation, there's a huge disconnect right now, and there are a lot of errors being made because people are exclusively looking at cost savings and not looking so much at generating revenue. When you think about it, the average lease, what, $1,000, $1,500, $2,000? You're talking between $12,000 and $24,000 a year, one lease, one. Okay, to cut $24,000 in cost is a huge fine. That's a big deal. And that's a big change in operating and procedures. So you can fix the revenue side bigger and faster than you can even come close to fixing the cost side. Now, I'm not suggesting don't pay attention to costs because you obviously want to keep costs down, but don't do it at the expense of revenue generation. That's a mistake.
Yeah, well said, Peter. Thank you. Now, how do we partner? I'm gathering, and I could be wrong, that there are two ways to partner. There's a university. Is that different or separate from Rev itself, or is it just Rev University in
Yeah,
general?
yeah, we do it as a package. So if you think about it, we've thought about offering the leasing university, generally speaking, to anybody and everybody. But the problem with that, frankly, Nico, is the people we're going to offer it to, one, probably haven't self-assessed, right? Two, probably would not have assessed to the degree that we have because we're collecting almost between 500 and 1,000 data points. And so since our whole purpose in life is to focus on multifamily leasing, we feel much better doing that assessment than listening to what someone else is telling us about themselves. Okay. And so in order to train up, think about it. To train up, you got to know where your issues are. We don't generally train people up. We specifically train people up as to their deficiencies. And so if you really haven't identified the deficiencies, there's no way to offer this to everybody. So that's why we've tied the two together. They really are pari passu. I mean, we also, the second point is, what we talked about earlier. If the effort to get better isn't there, we're not valuable as a company. And I don't want to be irrelevant as a company. We want to be highly relevant. So we actually have to make sure that we're on the same page in terms of what's necessary on the training side. But we built the training side. I was actually talking to this venture capital lady that I know. She's really bright. And we were talking about the leasing score and finding all these deficiencies. She looked at me and she said, and then what? What are they going to do with these deficiencies? And I said, well, I guess we're going to be training them up. And so that was our thinking. We fast forwarded all our build out on the leasing training because we couldn't just leave people with problems. We had to actually give them some tools to fix those problems. So that's the kind of the fast forward genesis of the leasing university.
Awesome. It makes sense. Now, would you be working with, I guess maybe you can answer. Would you be working with me, maybe a partner of mine, or my property manager, or maybe my property manager's leasing agent? Who are the main points of contact?
We're flexible. Whoever it's going to take to implement the change, right? So for sure, operations is going to be involved, right? It's probably it's probably gets down to the property manager level because they're going to have to clear time for the leasing person to be able to take a half an hour a day to improve. And somebody's going to have to monitor. We don't monitor the people other than when we come in and rescore them. Someone has to take the responsibility on property for monitoring the progress that's going on, making sure that half an hour a day is getting done, making sure they're doing well on their scoring. I mean, all of the things. This is kind of a self-service deal. We'll help design the program, but it really is a self-improvement program, and it will work if the effort is there and the incentives there. I didn't get the chance to fully outline our thinking on the incentives. So getting back to that topic, as I mentioned early, there is no real career path in leasing. within the property management structure. If you show a modicum of talent, you're becoming a property manager. You're out of leasing. And so one of the first things we highly recommend is to create a career path within the organization. If you do a great job as a leasing person, don't move out of it, then become a leasing manager. And then from there, maybe, you become a regional leasing manager. I mean, keep it in leasing, because people that have leasing skills and have the leasing, makeup aren't necessarily, they might be, but not necessarily property management makeup. Those sets of skills don't necessarily overlap. And so career path, number one. Number two, incentive program based on performance. If you're getting more leases, get more money. Okay, so three, make it a kind of a promotional thing, right? They'll actually get the title improvement, right? Not just have the pathway, but be able to move up in title and status and stature within an organization. So, if all of these things will work, then we think, almost 100%. We don't give guarantees, but if there was such a thing as a guarantee in our business, if you do all of these things, our experience in training 500 people in leasing over the last 5 years is they will do well. They will do quite well.
Great. Peter, what are the costs involved for us?
So as a package, right now, and it's a volume, there's volume discounts involved. So on a one-off basis, let's start with just doing it once. Okay. It's about a $10,000 ticket, but it's the type of thing where, CBRE will give you a market report and they'll charge you $10,000 for it. And it's static data, right? They give you the report. You see what your comps are. You get nice pictures. You see, all of the things that are going on in the marketplace. And that's not novel data. They're just collecting the data, pulling it all together and handing it to you and charging you $10,000. Well, our data, we've designed the program. We've gone out and collected our own data on the program. It's not in CoStar. It's not everywhere else. We literally create our own data. Then we create a report that's, highlights the, top 15 market indicators that they need to be monitoring. We give them a report, tell them where they need improvement, give them the course training that's involved. It's part of the 10,000. So you're training up for this program. And then we come in and retest. And so it involves a beginning and an end test with a training program in the middle, and that's 10,000. Now, if you are going to order 50 of them from us, there's pricing, discounts involved, but that's the suggested price.
Excellent, thank you, Peter.
And it's one less than cost of one lease. I'd like to always frame this this is a leasing business. I always frame things in terms of leases, and one lease pays for all of this.
Absolutely right. Because as you stated earlier, if it's 1,000 to 2,000 multiplied by 12 months, I mean, there's the savings right there for one unit. Now, Peter, just overall, because we're getting towards the end of my time here, but overall, from a general point of view of your expertise through leasing, have you seen changes in the marketplace of challenges recently with leasing?
Absolutely. As the economy goes, all of the performers in the economy go, right? And so, lately, what have we seen? Well, let's see, I jotted a few notes down. So amazingly, we're at a 50-year high right now of multifamily new construction. So more inventory coming to the marketplace. At the same time, we have negative rent growth, right? We've plateaued on rent, for this year, and some markets are flat and some markets are down. And so you got that as a problem. You got maturing debt obligations, right? People got great financing over the last few years. Well, those rates are not available anymore, which means cost of debt is way higher. We just follow the interest rates and the labor problem in the U.S. We've got staffing issues all over the place. So the way I look at it is there's high turnover in leasing, not in our company per se, but we do a lot of work with a lot of different companies. There's high turnover in the leasing position. This is a stabilizer. So, this kind of a thing, when you can work with the talent you have to upgrade that talent and make it highly functional, you've now stabilized your asset. And so, but I always had a saying, in the good times, and 2 years ago, 3 years ago, people were buying these types of assets that I heard of people buying it under a 3 cap. Okay, so let's call it a 3 cap. We know that takes 33 years to get your money back. Okay, that's a very aggressive investment. And so I don't think they're paying 3 caps today. I mean, 5s and 6s and 7s are back in the marketplace. And you know, back in the day when 3 caps were out there, and it wasn't everywhere, but 3 to 5, 3 to 4.5 were pretty common. Anybody could lease. These things were leasing with, if you could write a name down, you could probably get a lease. That's not true today. And it's not true in normal markets. Those were excessively hot marketplaces where demand way outstrips supply. And we're not seeing that today. Supply is the highest, as I said, in 50 years. It's coming on board. And all of the lending and all of the market conditions are worse. And so leasing becomes the competitive marketplace, the competitive landscape. You have to be good at leasing right now.
Absolutely, 100%. And I'm seeing it with my fellow operators as well. We're noticing more vacancy and challenges with leasing over the past year. So this is the time to jump into Rev University, guys. I'm going to transition to our final question, Peter, and then we're going to get the listeners some form of contacting you. So here we go. Let's imagine it was 100 years from now. I know you have grandchildren, but now you're going to have great-great-grandchildren. And they're going to be so happy running around because all the apartments in the country are now filled with your Rev University skills. And they wanted to write a book about you, Peter. What would you want them to title this book?
Passionate work. Always be passionate at work. I mean, something like that. I mean, that's a first stab. I would play with it a little bit, but if you bring passion to what you do and you believe in it and you make sure you're doing something that means something, you'll be pretty good at it. That's the way I approach work every day. I love working, as you can't tell.
I can totally tell, and I'm the kind of guy that's as well will never retire. I'm going to be working till I can't work anymore. And I appreciate your time today, Peter.
Yeah, this was a great conversation. Thank you, Nico. Nice to meet you.
Yeah, let's get the listeners a form of contacting because they're going to want to follow up with you. This is pertinent information. We need to all be on top of leasing. This is paramount for success. Drive that revenue. How can people find you?
Sure, absolutely. Connect at RevMLC, multifamilyleasingcompany.com. You can go to our website, www.revmlc.com. You can call us if you actually do that still. Most people don't. We're 832-699-2378 in Houston, Texas.
Awesome. Peter, thank you so much again. I appreciate your time, and I can't wait to connect with you offline. Thank you, man. Have a great day.
You too. Take care.
All right. Hey, Small Axe community. I would like to say thank you for listening to another episode of my podcast where we show you how to use your small axe to build a lasting empire. Now, if you liked what you heard, it would mean the world to me if you would subscribe, leave a 5-star rating, and write a review. Also, if you want to get in touch with me, go to my website at smalaxecommunities.com. Book a call with me. And until the next episode, keep sharpening those axes.